Do you sometimes find yourself staring at the money in your bank account and you feel like something's just missing? And you've heard of people mention things like stocks and crypto and something about making money work for you. It might feel like a foreign language full of jargon, not to mention all the scary stories out there about people losing it all when it comes to investing. Well, that was me before I started investing. If that sounds like you, then you are definitely in the right place. Investing doesn't have to be complicated. I'm going to make it super easy for you. And it's not just for the Wall Street pros. Investing is for anyone, and I mean anyone, who wants to build a better future for themselves and their family. I know I do. So, in this video, we're going to cover every single step you need to know as a beginner when it comes to investing. I'm going to filter out all the noise for you so you don't have to. And that's why I've broken this video out into easy components. The first component, why do you even need to invest? The second component, well, what do you invest in as a beginner? The third component, what actionable steps can you actually take to get yourself going? And lastly, I'll conclude this video by talking about the millionaire fast lane. First of all, why even bother investing? The biggest reason is something that you've already felt every time you go out and buy something, and that's called inflation. This is that silent killer of your savings. Think about it. Every time you go out and buy that cup of coffee, do you feel like it costs more? What about groceries? They cost more each and every year. That is all inflation in action. And that simply means that your money today is going to buy less things tomorrow and even fewer things day after that. If you just leave your money in a regular bank account, and hopefully not, but if you leave it under your mattress, you are losing purchasing power. The point of investing is very simple, is to make your money work for you so it can make more money. And that's your biggest weapon against inflation. And the most beautiful part about investing is one word, compounding. In fact, Albert Einstein called this the eighth wonder of the world. The longer your money is invested, the more compounding can accelerate its growth. Not only does investing help you outpace inflation, but it also helps you build wealth faster than saving. Whether that financial goal is retirement, saving for a new home, buying a new car, saving for vacation, doesn't matter. Investing is your secret weapon. Now that you know why you need to invest, let's cover a few key concepts. First of all, saving is not investing, and the difference comes down to time horizon. If you need money within less than 5 years, you want to park that money that is easily accessible, whether it's in a high yield savings account or in a GIC. GICs are a great savings vehicle because you know exactly how much interest you're going to get over time, and your principal is guaranteed as long as you hold it to maturity. Now, for money that you won't need for 5 years or longer, that's the money you put for investing. Next, we have risk and return. Generally speaking, a higher risk investment comes with higher earning potential. And yes, with investing, there is a very real risk of losing your money. So, to overcome that, you want to invest for a longer period of time. And the longer you invest, you reduce that risk of permanent loss because markets tend to recover over the long haul. And this is why understanding your own risk tolerance is so important. For example, are you able to sleep overnight knowing that your investments may be at 50% by the time you wake up in the morning because there's a temporary downturn in the market? Can you stomach a temporarily big loss in your portfolio to hopefully see bigger gains over the long run? Finally, this is crucial for beginners, diversification. What that means is don't put all of your eggs in one basket. And when that comes to investing, what that means is invest across different companies, invest across different financial sectors, invest across different geographies, across different asset classes like stocks and bonds. Because if one investment does poorly, the others will help balance it out. Diversification is your best strategy in helping to manage risk. Let's now talk about what you actually put your money into because there's so many options out there. Different talking heads, different financial gurus will peddle different investment options. You have things like stocks, bonds, real estate, REITs, crypto, art, watches, or that digital image fad of NFTs. There's way too much complication here. So let's simplify. For your purpose as a beginner, there's only two asset classes that you're going to focus on: stocks, which is sometimes called shares or equities, and the other are bonds. Buying a stock actually means that you are an owner of a business. You actually own a very tiny part of that company. And if that company does well, that stock price will go up. And the other way you can make money is through dividends. That's a little payout the company makes out of profits to shareholders. Bonds are different. You are essentially lending your money to a government, to a corporation, and they will pay you interest over time until that loan is due. Bonds are generally less risky, but also come with much less return potentials compared to stocks. Now, while picking individual stocks may sound super exciting, but trust me, you don't want exciting when it comes to your investment portfolio. You want boring, you want simple and boring. Not to mention, picking individual stocks is extremely risky, especially as a beginner. Trying to predict which company is going to be the next Apple or the next Nvidia is super tough because you might actually end up risking all of your money on a company and that company significantly underperforms and you'll risk losing your money. This is where ETFs or index funds come in, and they're hands down the best starting point for beginners. And an ETF is effectively a basket that holds a bunch of different companies across a bunch of different sectors, across a bunch of different geographies, all in one convenient package. And the biggest, the most popular index fund is built around the S&P 500, which are the largest 500 biggest companies in the US. I love ETFs. I'm a big fan of ETFs, as you can probably tell from this video. But why are they so great? One is, we've already talked about, it's instant diversification. One ETF is going to spread your risk across different geographies, across different companies, across different sectors. Second is low fees. Because index funds, all they do is passively track an index like the S&P 500, there's less active management involved, meaning there's no fund manager trying to individually pick stocks. Because that's less work for them, you end up paying lower fees, which is called the MER, or the management expense ratio. And the lower the MER, the more money stays in your pocket and less of it goes to feeding admin fees. Next, simplicity. You don't have to read financial statements. You don't have to figure out a P&L, cash flow, operating cash flow, CapEx. Are they investing in debt? Different equities? Are they doing M&A? None of that matters to you because you are buying the entire basket of different stocks. And lastly, you get performance. Historically, the S&P 500 has delivered some amazing returns over the last 10 years, 20 years, 50 years. If you zoom out long enough, you'll see how much wealth just the S&P 500 has built for those ETF holders. So now how do you actually buy the S&P 500? Well, there's different ETF options like VOO, SPY, SPLG that track the S&P 500 in the US. And if you're a Canadian investor and you also want to invest in the S&P 500, well, then you can pick up ETFs like VFV, ZSP, or XUS. All these are amazing options. They're just by different investment companies. And for most beginners, all you need to do is invest regularly, effectively every time you get paid, and just keep on investing in the same index fund you've already chosen. Now I have to mention this because eventually you're going to see a video on YouTube or Reddit or a friend or whatever on cryptocurrencies like Bitcoin, Ethereum, Solana, meme coins, stable coins. You don't need any of that. Crypto is a very volatile and a very risky investment. This is not a get rich quick scheme. Ready to put all this into action? Because I'm going to show you live on how you can make your very first investment. But before we can even do that, there's a quick financial checkup you need to make. First is debt. Do you have high interest debt? Credit card loans, car loans, whatever type of loan you have. If you owe money to somebody, take a note of it and see if the interest rate is over 8%. And the reason you want to prioritize paying high debt first is because that is a guaranteed rate of return that you're going to get from saving interest over any potential investment gain. The second thing you want to check in on is your emergency fund. Once you have that debt piece figured out, the second piece is make sure that you have 3 to 6 months worth of living expenses in an easy to access account, and that's going to be your emergency fund. And the reason you want the safety net, because it's going to prevent you from having to force sell your investments because you need quick money for whatever emergency you face. Now that you're ready to start investing, what you need is an investment account. Now this is different than a regular checking account or a savings account because you want to open an investment account from a brokerage. The next piece you have to figure out is what type of investment account do you want to open? A taxable account or a tax advantage, also called a registered accounts. Tax advantaged accounts are key to building long-term wealth. Why? Because they can shield your investment gains from taxes. For Canadians, we have three amazing options in Canada. The first is the tax-free savings account, the TFSA. The best thing about the TFSA is that whatever money you put in, you can withdraw anytime you want, and you don't pay a single cent in taxes on whatever investment returns you make. It's the ultimate flexible, tax-free, beneficial account for you. Next is that RRSP that you can open up, which is the Registered Retirement Savings Plan. Contributions are tax deductible, and you don't pay taxes until you take money out. The last one is that FHSA, the First Home Savings Account. Contributions are tax deductible, and withdrawals are tax-free if you're going to use it to buy a home. The next step is choose an investment platform or a brokerage. This is a company that's going to allow you to open up those taxable accounts or tax advantaged accounts and allow you to buy and sell investments. That'll help you figure out which is the best option for that brokerage account or investment platform. I'm going to give you a checklist, effectively a cheat sheet that you can use to find the best one for you. The first thing you'll look for is ease of use, especially for beginners. The second piece you're going to look for is low or no commissions, because many platforms offer free trading for stocks and ETFs, but you want to watch out for fees like account maintenance fees, transfer fees. So make sure you are looking for low or no fee accounts. Third one is key, reputation. Make sure the company that you open up an investment account is legit. It is reputable. It is regulated. The fourth thing you'll look for is, does it offer beginner-friendly features? Does it have a beautiful, easy-to-use UI so you don't get lost in the mix? In Canada, Wealthsimple and Questrade are two of the most popular DIY options when it comes to online brokerages. So do your due diligence, do your homework, and use a checklist we just went through to figure out which one is the best for you. The next step is to fund your account. So go ahead and link your bank account and transfer money. You can start small, but the point is you want to set up automatic transfers every time you get paid. So that way you don't have to think about, hey, I got to transfer money to my brokerage. It's done for you automatically. And that's one of the keys of building long-term wealth, automation. And finally, we are now ready to make that first investment, and we're going to do it together step by step. So go ahead, launch the app that you're going to use, or go on your computer. If you're already on your computer, then open up your browser and go ahead, launch the brokerage account. Now that you've logged in, what you're going to do is, using your platform search feature, you're going to enter the ticker symbol in the search box. So in this case, let's go ahead and use VFV, which is the Vanguard S&P 500 Index Fund. Next thing you want to decide is, how much do you want to invest, either in dollars if fractional shares are available, or the number of shares. That's it. Now go ahead and place your order. Now, a big caveat here, do not buy what's trending. Invest in what you know. Invest according to a strategy we've been talking about throughout this video. As an investor, you have to adopt a long-term mindset. Keep your money invested for at least 3 to 5 years, ideally much longer than that. And do not try and time the market. This is a costly mistake. And don't listen to anyone who tells you that they know if the market is going to go up or down. The best approach, the single hands down best approach, and this is in fact what I've been doing over the last 10 years, invest consistently, invest on a regular schedule, no matter what the market is doing. Also, avoid panic selling. I know, I get it. It's scary to see your investments go down during market turns. But remember, you only lose money if you click that sell button, and markets tend to recover over time. And the best way is to just zoom out. For example, take a look at this S&P 500 chart and just zoom out. You'll notice that over the long run, it has actually grown. And finally, let's touch on a different perspective when it comes to investing, and that's the millionaire fast lane. Now, traditional investing, pretty much everything we've talked about is going to feel slow. Yes, we've talked about the snowball and how compounding is the eighth wonder of the world, but it does take time. The biggest thing you can do for your investing is give it time, and time can be decades before you start seeing meaningful returns. Now, this could mean investing in skills or courses that allow you to accelerate your career, because that will also increase your buying power. The other way is you invest and you start your own business. So the more you make either in your career, and the faster you increase your earning potential in your career, or maybe you start up a side hustle or you start your own business and you make more money, take that extra dollars, take that increased earning, and you put it to investing. What's your biggest concern or your biggest roadblock do you feel that's preventing you from investing? Drop me a note in the comment down below. I'd love to hear from you. If you found this video helpful, make sure you hit that like button, make sure you hit that subscribe button, because that lets me know you want to see more content like this, and that's the type of content I want to make for you. And make sure to check out all the links in the description down below, because I have some amazing resources for you that I've talked about in this video, and I have links to other videos of mine where I talk about what ETFs can you get started with, what are some of the 5 best ETFs for investors, and much, much more. So definitely check out all the links in the description down below. That's it for now, and I'll talk to you in the comments section.